After Fitch Ratings downgraded the country's debt ratings to junk status last Friday, the global financial services company JP Morgan announced that South Africa will be excluded from its investment-grade emerging market bond indexes in late April. This announcement was made hours after South Africa was downgraded to junk status for the second time in a week. Standard & Poor's, another ratings agency, downgraded the country to junk status before this. Moody's is also reviewing the country's credit status, and this will shake investor confidence even more. Let's get some clarity now, because I'm noticing that so many people are asking, what does this mean? I know we've spoken about it at length, but we're going to continue to do so you and I can understand better. Dr Azar Jammine is in studio with us. He's the chief economist at Econometrix. Good to have you, Azar. Thank you very much for coming in.
Thank you very much, Leanne.
So what does it mean for us? I mean, people asking, global financial company JP Morgan excluding South Africa from its investment-grade emerging markets. In layman's terms, what does that mean to me?
It's very difficult to explain in layman terms because you've got these so-called tracker funds, funds that people invest in that try to imitate the average of all bond investments in emerging markets or whoever it is. And the most important of these is the Citigroup World Government Bond Index that basically gives South Africa a 12% share in all the emerging market bonds in the world. And these tracker funds try and imitate this by having 12% of their portfolio in emerging market bonds invested in South Africa. Now, JP Morgan's bond index was similar, except it impacts upon, it's far less important, fewer people actually follow it than is the case with the World Government Bond Index of Citigroup. Yeah. Therefore, the impact thus far has been fairly muted. As we've seen today, the rand has actually risen since that event rather than fallen. Now, the difference between the two is that JP Morgan the moment Fitch downgraded us to junk status, said, right, that's it, South Africa has to drop out of that index, which in turn obliged those people who were invested in those tracker funds to sell out of South African government bonds so that their portfolio mimicked that of the JP Morgan index. The big danger is if the World Government Bond Index does the same.
So that's what we've got to watch out for.
That's right. And the requirement there is that both Moody's and Standard & Poor's get us onto a junk status on our local currency debt. Now, neither of those two ratings agencies is actually yet on a junk status for local currency debt. S&P downgraded us to foreign currency junk status, but only about 10% of all South African government bonds are denominated in dollars or euros. 90% are denominated in rands, and those are the ones that foreigners own most profusely.
Yeah.
So the real key is, will Standard & Poor's downgrade us one notch further, in which case our local currency debt goes into junk status? And then will Moody's downgrade us 2 notches further, because at the moment they're 2 notches above junk status. Yeah. So, it's quite
so we're sitting on, it is a technical thing. It really is a technical thing. And that's why I think when people try to make sense of it, it's a little bit difficult to make sense of it because of all these technicalities you're talking about. But at the end of the day, the reality is that it is going to have an adverse effect on a lot of South Africans' lives. Things will become more expensive. We could see inflation going up, interest rates, the price of petrol. I mean, it's a ricochet effect that will influence and affect all of our lives.
It will affect all of our lives if the new Minister of Finance and his team, I don't know if he's got a team, actually change direction and abandon the fiscal discipline that Pravin Gordhan pursued. Thus far, the impact on inflation and the outlook for interest rates is not particularly devastating. The rand at 13.42 this morning is no worse than it was in February, so the impact on inflation is not going to be huge and on the man in the street. But if they don't do the right thing and we are downgraded further, then there will be large-scale sales of South African bonds, and we could get the rand going to 16, 17, and then you will see the inflationary pressures, higher interest rates, and that would then impact on the man in the street.
Why are we holding our own? Because we're watching this currency very, very closely, and it seems to be well. I mean, if we go back to when it was the first reshuffle and the former finance minister Nene was removed from that position, the rand was hitting 17.
There's one fundamental difference. At the time of Nene's firing, commodity prices were tumbling. People were expecting American interest rates to start rising for the first time in 9 years. Sentiment globally towards emerging markets and risky assets was very, very adverse. And the situation is very different right now. You saw the gold price rising to its highest level in 5 months or something, 1286. That's good news for sentiment towards South Africa and commodity producing countries. And that seems to be outweighing the negative effects of the political environment. Secondly, I think that international investors are quite hopeful that Zuma's not going to be there much longer. And so they're trying to look beyond that.
Okay, so we're seeing a bit of a forward thinking on the markets. But in terms of people that have got, I'll ask you two things. But the first question is, people that have got pension investments that are perhaps invested offshore that are, with different financial institutions, are they going to be affected?
Well, that's one of the ironies. We get some of the members of the ANC, the Zuma-led faction, talking about this is hogwash about the poor feeling it. The rich are complaining right now because and saying the poor are going to feel it more, which is absolutely wrong. The fact is that the poor are going to feel the pinch much more than the rich, because the rich are protected by the fact that when the rand falls, their foreign investments actually improve, and even their investments in shares on the Johannesburg Stock Exchange, half of which have huge holdings of interests overseas, they're protected in that way.
Yeah.
And so you've seen the JSE at its best level in about 3-4 months, and also higher long-term interest rates improve the returns on pension funds. And so people holding pensions are not being affected by the current state of affairs right now.
Yeah, all right. So let's give a bit of advice to South Africans at this point. Is there something we should look at cutting back? I know a lot of people saying go out there if you can, pay your debts off, just get yourself into a lean lifestyle.
I think that is an advisable piece of advice. There's no question that if the worst case scenario materializes and we do embark upon radical economic transformation in areas that blow the budget completely, we will get downgraded, the rand will tumble, interest rates will then rise. All I'm saying is it's not a dead certainty at present, but don't take a chance. Reduce your debt in the face of the possibility that worst case scenario might actually materialize.
Yeah, which is a big worry, because that's where we don't want to go. And I think that we can get over it if action is taken very, very fast. Are you happy with what's being done so far?
No, not at all. I see contradictions between what the Minister of Finance says on the one hand and what he then says on the other hand. There's a complete mismatch between talking about the kind of radical economic transformation which involves huge expenditure on the upliftment of the masses on the one hand, and then committing yourself to fiscal discipline on the other hand, without addressing corruption and incurring huge savings on that. And that is where people are very skeptical about whether the new Minister of Finance has the wherewithal to fight corruption and incur savings on that.
All right, we'll leave it there for this morning. Thank you very much for talking to us. Dr Azar Jammine is the Chief Economist at Econometrix, talking to us about the downgrades and some advice of what we can do at this point when it comes to our money and the economy.